as the taxpayer, bear the burden of proof.
Mm-hmm.
The IRS does not.
Mm-hmm.
Information presented on this program is believed to be factual and up-to-date, but we do not guarantee its accuracy, and it should not be regarded as complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but are limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Encompass More Asset Management LLC is a registered investment advisor with the U.S. Securities and Exchange Commission and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements.
Hey guys, welcome back to another episode of the Charme Wealth Management Podcast. Today I'm joined by a guest, Morgan Anderson, who is an enrolled agent with the IRS. She specialized now for over 2 decades of doing not tax filings like we normally talk about, but tax debt settlement with the IRS, state entities covering income tax, payroll tax, sales tax, all that kind of stuff. And so today we had a conversation about how to try to avoid running afoul of the tax agencies, the revenue services, and how to maybe behaviorally shift your mindset a little bit to move past that, and just some words of wisdom. So definitely a unique conversation, new to me. And I hope that you find it interesting. If you have any questions, as always, reach on out to us, send us a message. And if there's a conversation that you want to hear us have, or you want us to bring on a specific professional or type of professional onto the podcast, go ahead and message us that as well. You can find us on our website, insurmountable.com. Send us a message there. Send us a message on Facebook, Instagram, Twitter, LinkedIn, wherever you're at. And we will work on doing that for you. I hope you enjoy the show. There's a huge rift between CPAs and EAs and the public and JDs that do tax, and there's this whole misconception. Like it is so common for people to say, hey Brandon, who's a good CPA you like working with? And I'm like, well, yeah, I have several. What are you looking for in a CPA? And they're like, I'm looking for a really good tax person. I want to save on taxes. I'm like, and so what about a CPA is it that you think you need? And they're like, well, like that's the tax people, like they're the real professionals of tax. I'm like, dude, like, yes, they are professionals, and I have a high respect for CPAs, but you're limiting a huge demographic of people that could help you, potentially, if you're not considering EAs or enrolled agents, because from a tax perspective, they can do everything a CPA can do, right? They can't do audit.
The only thing they can't do is sign off on audits.
Right. Yep. Yeah. But they can still represent you to the IRS, right? If you have that tax letter come in, enrolled agent can have that power of attorney, right? And help you with all that kind of stuff. And what I found is a lot of them, like, because they specialize in just tax, they didn't have that early career doing, audit at one of the big firms or something. Like they're typically like pretty dang good at tax, because that's all they do. And so
you can have great CPAs and you can have really dodgy CPAs.
Oh yeah.
Like it's like anything.
Well,
but yeah,
I've done enough.
Speaking about the difference,
I've done enough professional exams at this point to feel it's fair for me to say that getting the degree or passing the exam or getting the designation is not, that is not the measure of a professional.
Correct.
That is table stakes, like the minimum bar, and how good a professional is beyond that is a totally different, topic of conversation. Anyway, so I'm a fan of EAs. I think there's like some really great EAs out there. I've enjoyed working with some. I've got, for what it's worth, like my dad is a CPA, and he started our firm. He's a CPA with a PFS designation, but we also have an EA on the team. Our Arrow's on our team, and he's got an EA. Great program. But then when I found you, like, you're not doing the tax filings, you're not doing that tax planning, right? You have a whole different angle that I was like, wow, I didn't realize that. You know what I mean? So, tell me, like, how did you get into representing people to the IRS and helping them figure out their tax problems once they have occurred, and you have that big tax, debt with the IRS or whatever, and you need now that like negotiation almost, right?
Yeah.
And not tax
Yep.
filing. How do you like, what have you done throughout your career that led you to get into that?
I kind of did it backwards. I started as an administrative assistant in a firm, like one of the first leading nationwide firms that did just tax debt. And when I interviewed for it, I was so young and naive. I didn't understand that people would file tax returns and not be able to pay the debt. I just looked at it from I've always been a W-2. It just never occurred to me that people would be in a position where something happened and they weren't having the taxes paid. By answering an ad in the paper for an administrative assistant, I tripped into the world of taxes and specifically tax debt resolution, and fell in love with it. It is a unique little corner of the tax world that not a lot of people know about, and hopefully they never have to deal with it. But in the 2022 filing season, over 11 million individuals filed tax returns with balances owed that were unaddressed.
Hmm.
There are millions of people every year who have a tax debt situation and then don't know what to do with it. And I love being able to say, you know what, no matter the tax debt issue, IRS or state, payroll tax, sales tax, income tax, there's always a solution, and that's what we specialize in.
So what does that look like? Because I hear like I hear people talk about, oh, you can negotiate with the credit card company and pay a lower balance, or like there's all these little loopholes people think exist, this or that. And I have, in disclosure here, I've never owed money to the IRS that I wasn't able to pay. So
Yeah.
I haven't been on the other side of that, and I don't really know exactly what it looks or feels like. I've had some clients I've worked with that have been in that situation, but they already had, kind of a payment plan sort of figured out and stuff. I can't imagine you just get to call up the IRS and say, well, I owe all this tax, but how about, we just settle for a lower amount and you guys feel great about it and I just pay less tax, right? Like, I can't imagine that's exactly how it goes. So like, what does that look and feel like? So the situation somebody gets in is they owe tax on something. They typically didn't plan for it, or something happened and they can't pay it. Now they're just like, they have a bill. Then what? How do
Uh,
where,
it,
you know
it,
what I mean? Like,
yeah,
how does this
and
work?
that's the position where people are when they reach out to me. And what few people understand until they're in the situation is that you can owe $10 million to the IRS or the state, but your financial condition really drives how to solve the debt.
Hmm.
So let's say, just for example, and this is a pretty common situation that ends up coming to us. There's a business owner. They had a very successful business for a time, and then something shifted in the market or something shifted in their industry, and all of a sudden the bottom fell out.
Mm-hmm.
They were trying to keep the business alive, hearing things may change, circumstances may change. And as soon as that circumstance happened, then they were going to be able to right the ship, get caught up, deal with any debts they had.
Mm-hmm.
But it just kept going and going and going. And eventually they weren't able to pay the taxes. They were paying just the net payroll to the employees. And before you know it, it's 2 or 3 quarters later, and they're just going to have to close shop. At that point, all those unpaid payroll taxes have to be dealt with. And let's say there's a couple 100,000 owed. Okay. At the point where the IRS starts sending the notices out, they're like, man, I've lost everything. I lost my business. I have to go get a job somewhere. So I'm going to be starting at the bottom again with a W-2 job, maybe making 80,000 a year, 100,000 a year. I've got a family. I don't know how I'm going to deal with this debt. The taxpayer's financial condition at that point is what dictates how collectible the IRS or the state will see them.
Mm-hmm.
And that lets us open the door of maybe we set up monthly payments to address the debt, but it's not going to pay the debt in full during the time frame that the tax agency has to collect on it. Maybe we do a settlement, like you said, right? But they look at when you do a settlement, they look at all the assets in your name, any
Mm-hmm.
401k plans, investments, cryptocurrency now is another question they ask about. And then we look at your monthly income versus what they consider allowable for your expenses. And that all of that kind of is a formula that leads to a settlement number. There are situations where we'll leverage assets to make a lump sum payment. We'll then negotiate for penalties to be abated. It's all driven by the taxpayer's financial condition and the programs that the tax agency has in place to address the debt. And as many different variations of financial conditions you can imagine people are in, that's how many different variations and ways there are to address a tax debt.
Okay.
Yeah,
Lot to start unpacking there.
there is so much. There's so much. And that's why, if you don't mind me jumping in again on this is all that I do.
Mm-hmm.
And there's a reason that this is all that I do. It's because to really know all of the pieces that come together for the best solution, you have to specialize in this. It takes more than full time for years to really get to the level that me and my team are with handling tax debt. You can't just kind of dabble in it and know what you're doing,
Mm-hmm.
because generic notices, like for example, the IRS sends out notices and you have a right to appeal the threat of action.
Mm-hmm.
But when you appeal, it starts another domino effect related to the debt. Do you want to do that or not? You need to know all of these moving parts to really know how to effectively navigate the game board of dealing with tax debt to make sure you never take a misstep on a client's case
Mm-hmm.
and that everything you're driving toward is really going to be the best benefit for the client. So that's why with my practice and with my career, I've decided to just focus on this, because I know without any doubt that every move I make for my clients is absolutely the best next step we can take given their circumstances and the debt that's owed. That's why you'll have CPAs who focus only on corporate businesses and internal audits because they are specialized in that one
Mm-hmm.
area,
Mm-hmm.
right? Like a lot of CPAs that have like hung their shingle out and they're your local CPA. They know what they're doing. They give you great guidance kind of overall, and they help position you in the best tax strategy position possible. Right? You have people who deal more with small business owners. You have people who deal more with individuals. EA is the same thing. A lot of them will get financial advising certifications and they'll deal with a different type of client.
Mm-hmm.
What we do is we just deal with this one corner of the tax world.
Yeah. So what is the most common situation that you see people getting themselves into when it comes to creating that tax debt liability? What is the primary drivers, or what are the things where people could start looking at their own life and saying, ooh, I could be heading down that road to having a tax debt and not really know it. Because
Yeah.
I think it's kind of like that stuff's the slowly and then suddenly kind of thing,
Yeah.
right?
There's a couple of primary for individuals. It would be inheritance. Um, the moment you start receiving assets from somebody who has passed away, get with your trusted tax professional and say,
Hmm.
what do I need to do?
Yeah.
Unfortunately, a lot of people have come to me with like, oh yeah, I got a couple $100,000 from Aunt Betty and I spent it. It's like, okay, well, there's probably going to be some tax consequence to that. Um, the second thing is self-employed individuals, people who have started a business. And in the beginning, they're not making money, but year 3, year 4, they're starting to clear a net profit that creates taxable income, self-employment tax.
Hmm.
Um, Having a plan in place as you're growing, working with a trusted professional on a quarterly basis where they can help give you guidance to make tax payments or to make pivots. It's really crucial. The other unfortunately most common type of client that comes to us is somebody who has been building a business. Let's say they're an S corp. They've got 15, 20 employees, and they have somebody that they've trusted to help manage the accounts payable, accounts receivable, payroll, all of that, in-house bookkeeper or accountant. Um, and that person has failed to make the taxes on the behalf of the
Mm.
company name. Maybe there's an embezzlement situation. That's typically where we see a problem with small business owners.
Uh, Super important to trust the people that you trust, like to really trust the people that you trust with your money, right?
Yeah,
Um,
and have checks and balances in place.
yeah, yeah. It's like when I was in the military, right? There's the saying, like trust them with your wife, your life, and your money, right? That's like what you
Mhm.
want in a good battle buddy. And I think that's yeah, maybe not as dire in business, but you want to really be able to trust somebody if you're going to give them access to the money. And at the end of the day, that's the people that are the operators of the business from the financial sense need that access. But that access does allow for those types of situations to occur. How does the IRS look at that? Like so if somebody has an embezzlement case, or whatever, and so it's, hey, the CFO we hired or our controller, is like, they were the ones asleep at the wheel. It's like not our fault that the taxes didn't get paid. How does the IRS respond to that?
Oh, they have a whole interview process where they go through who had the duties and responsibilities. Um, Whenever you have a business, there is an inherent responsibility attached to you
Mm-hmm.
to ensure that you have checks and balances in place to prevent anything from happening.
Mm-hmm.
But despite you having those checks and balances in place, people are still pretty devious. People can still make moves. I had a case where I was able to negotiate the owner of a business being completely absolved of personal responsibility for $200,000 in unpaid payroll taxes. And it's because we were able to prove that his in-house accountant had presented him falsified tax returns showing that she had paid the taxes. She had had him sign checks made out to the IRS and then never sent them in. And we were
Mm.
able to find those in her desk once everything was uncovered. We had the copies to show that she had created them, had him sign them, and she just never sent them in.
Mm.
Same thing with the falsified tax returns. But the IRS definitely put us through the paces and made us jump through a lot of hoops to prove that he had no idea instead of sending the tax money to the IRS, she was pocketing it.
Yeah.
Yeah.
That's, I always,
So,
like, one of the things I always try to remind people that they never think about is that there is an inherent assumption that everything is taxed, right? And when you file taxes or you take that deduction or whatever, you're saying, hey, I want an exception to policy, basically, right? Like I qualify for an exception, and that's what you're filing, and the IRS can come back and just say, no, prove it. And so you're sort of in tax court when it comes to taxes, you're sort of guilty until proven innocent, not innocent until proven guilty, like people like to, that's what we're most comfortable with here in America, right? Is innocent until proven guilty. Well, prove it. It's like, well, the IRS doesn't have to. You have to prove it, right?
Yeah.
And that can
Same
make for
thing in
some,
audits.
yeah,
Same
uh,
thing in audits. They say, oh, well, we believe this because we've gotten financial records shared with us from third parties, and we don't see it on your tax return. You as the taxpayer bear the burden of proof.
hmm
The IRS does not.
hmm
Whenever you're speaking about the IRS or the state, I feel like it always has this big asterisk behind it
yeah,
because there's always going to be a situation where you're going to be put on your heels. And
yeah.
yeah, it's always better to cover yourself.
So what's the best way for somebody to try to have those checks and balances? Like what are the things people can be doing or thinking about to try to avoid having tax debt to begin with? Right. Aside from just, cut huge checks to the IRS, right? Like, no one's,
Right.
no one's taking that advice.
No, no. Um, especially, there's a couple of different angles to answer that question with. First and foremost, for individuals, um, stay ahead of your income. Work with your trusted tax professional to say, okay, this is what my income is. I'm getting a raise, or I'm having a family, or my kids are now in the next year going to be moving off to school. Plan with your tax
hmm
professional. Always be looking a year down the road. As a business owner, make sure you have a good bookkeeping system in place. A lot of times I've had clients to me, well, my wife's cousin was handling my QuickBooks Online account, and I don't know if she knows what she's doing. Paying for a good experienced bookkeeper is probably the best $200 or $300 you as a business owner will ever invest.
Hmm.
The second best one will be getting with your tax professional quarterly, not just showing up on their doorstep on February 15th saying, okay, my tax return's due in 8 weeks. Here's a shoebox full of receipts. At that point, you're talking about history, right? You're
hmm
dealing with the financial records from the year prior. You can't make any pivots at that point to improve your tax consequence or your tax position on your
hmm
tax return. So, as a business owner, you want to be working with your trusted tax professional at least quarterly. Here's my profit and loss statement, my balance sheet from the last quarter. Let's talk about what I have coming up in my business and where I'm heading, because we want to put plans in place to keep me in a more advantageous tax position, the most that we can plan for. If I need to be making estimated tax payments for flow through income, I want to know in April of 2025 what changes I can put in place or how I can make additional payments or how I can leverage where I am to reduce my tax burden moving forward, or at least stay ahead of it. So when I file my return next year, I don't have a balance that I need to worry about.
hmm Uh, so just being proactive, right?
Mhm.
Monitor how much your, withholdings are. If you work a W-2 job, adjust those. Mind the farm. We try to
Yeah.
do a lot of that for our clients. Some clients just don't take it serious enough, and I wish they would, but some don't.
Yeah.
And yeah, it's really nice when you catch that in like April or May, and you say,
Mhm.
hey, if nothing changes, you're gonna probably owe some taxes at the end of the year, right? We might want to adjust those withholdings,
Right.
or hey, if nothing changes, you're gonna probably end up getting a huge refund. So don't wait for the refund. Let's just adjust it down and maybe start putting that money to work, sooner.
Right.
And those are great conversations to have. We like those conversations.
They
Um,
really are.
yeah.
And for individuals and business owners out there who have that trusted tax professional, think about all the experience and knowledge and schooling and education that they've amassed during their career.
Yeah.
Why not this sounds kind of blunt, but why not exploit all of their knowledge to help you and
Yeah.
to better your position?
Yeah. Uh, I just had a question that came to my mind,
Yeah,
that I want to get your take on, if that's okay. And if you don't feel
of
comfortable
course.
commenting on it, then we'll move on.
Okay,
You live in northern Utah, correct? That's like where
correct.
you're. Okay. I'm down in St. George.
Okay.
Um, there is not a shortage of vehicles in the state of Utah. Typically high-end luxury vehicles that have a
Mhm.
Montana license plate. And I think we all know why they have a Montana license plate. And I can assure you that in general, it's typically not because that's a business operating out of Montana that just happens to be in Utah for the weekend.
Right.
My understanding is that the state of Utah had closed that sort of loophole, if you will, by instituting a use tax on vehicles that are driven in the state of Utah and garaged here. How does that work with a tax debt if, they eventually, through whatever internal audit process, the flags go up at the state tax commission and says, hey, I think they owe some use tax on this vehicle. They identify it through whatever series of means that they do to identify that.
Mm-hmm.
And so all of a sudden somebody's bought and sold several cars over the last couple of years and hey, they're $100,000 car a piece or truck or whatever, and you've done 3 of them. That could be $20,000 in kind of use tax that's owed. How do they come?
Right.
How do they come handle that? Because that is now a debt, right? If like they come and say, hey, you owe this tax that you didn't pay, now there's a debt.
Right. I can't speak specifically to that, but what I can say is the federal government's record system is so archaic. So archaic. They're
Mm-hmm.
working on trying to make it more efficient, better performing, seeing red flags, identifying them, and figuring out ways to dig into them. But my goodness, ever since COVID, it seems like the internal infrastructure at the IRS, especially their technology, has broken down and it's
Mm-hmm.
actually worked against them being effective at collecting tax. We're going to see a strong shift in them being more efficient moving forward.
Mm-hmm.
When the IRS flags something as wrong and they initiate an examination of a tax return or somebody's financial condition, once they finish their examination, they share that data with the state. So what I can speak to is the fact that if there is something traceable that creates enough of a flag with the IRS for them to dig in on it, eventually the state will get that data.
Okay. And I guess in my head, the state would not be super favorable when you come to the table with that debt and say, well, I didn't know.
No, it will carry heavy penalties. And I don't know what Utah's penalties for a situation like that are. Every state has their own
Mm-hmm.
tax consequence for different situations. This is a pretty specific one.
Mm-hmm.
It's not as general as most tax situations that the IRS will audit and will flow through to the state. But every single state has their own specific ways of handling things. And with this type of tax, I would imagine there would be a really heavy accuracy related penalty, probably up to 100%.
So you end up paying double.
Yeah.
Yeah. Wow.
And they add interest to it.
Kick them while they're down,
Yeah.
Okay. Let's talk about one that's like more general, in sense that I sort of sense brewing, if you will. And I don't think it's a secret.
Oh, this will be fun.
ERC credits.
Oh.
Yeah.
Oh.
So,
yeah.
well, and so here's the really sad part, right? Is that I have talked to people that like they filed for ERC and they were under the impression because they worked with one of these, like, I mean, I call them the ERC bucket shops, but they're the fly by night
The
and
mills.
the mills. Somebody, somebody
Mhm.
found them and said, hey, we can help you file and, get this tax credit. And, like, well, if we look at all your stuff and can't file, we can't get you it, then you don't have to pay us anything. But if we find you this free money, basically, then, we'll just take like 20% of the free money we find. And so people are like, well, that sounds fair, right? It's like,
Sure.
and so they'd get whatever it was, $100,000 in this credit. And what ended up happening is $80,000 would hit their account. Well, in the tax transcripts, $100,000 went to them, right? And
Right.
so now, fast forward a couple of years, IRS is poking around, or they're re-auditing stuff, or their CPA or EA that they hire to do their taxes, normally and stuff, is going, hey, I don't think you qualified for this. Like, I don't think you
Right.
actually qualified. Now, it's been years, and so the money's typically long gone and spent. And not only do they have to pay back theoretically the 80,000 that they got hitting their checking account, but like they owe the 100,000 that was paid out by the IRS. The company that took the other 20,000 is in the winds,
Gone.
most likely.
Yeah.
Like, how does that process start to look for people, and what kind of steps can people be thinking about or taking to start working through that situation?
Yeah, this is, boy, when they came out with the tax return that let you claim the ERC credit, this was a flawed design. It was a flawed program. It was rushed to be released, and they didn't stop and think through it, because the tax return that you used to claim the ERC was the 941X, right? Or the
Mm-hmm.
941. And on the return, they didn't have you explain why you qualified. It just said what you could. There was like a line item that said ERC credit claim. And it was like, wait a minute. It was fraught for fraud.
It
It
was like, just
really
fill
was
fill in the
from
blank
the
and they're
very
sending
beginning.
you a check.
Yeah, it blew me away. I remember when they were saying, "Oh, we're releasing the form," and I was standing in my office and I looked at the 941 and I'm like, "Wait a minute. There is nothing here that says I qualify because."
Yeah.
It was just like a line item. It was amazing. So the program had this huge loophole that let fraudsters come in and exploit it. And it's a shame. It really is, because, like you said, most of those firms, those ERC mills, are gone. And a lot of them, funny enough, were owned by foreign entities. It's such a
Oh
shame.
man.
But for the people, and what these companies did, for those of you listening who didn't have exposure to this, everybody that they sold, they said, well, we'll fill out the paperwork for you. And what happened was there was an assumption that these companies were pre-qualifying you for the program,
Mm-hmm.
and they weren't. They were just taking the 941s that you had filed and filing amended return using the data on them, claiming the percentage and sending them in and saying, there you go, we claimed it for you. And because the IRS's systems, again, are so archaic, there was no stopgap measure to make sure you qualified as they were processing the forms. So all these people now are getting notices. I have 5 clients right now who are getting those notices. They came on specifically with me to help solve this, because they're now getting pushback from the IRS saying, wait a minute, you didn't qualify to claim this. Why did you claim this? And what's going to end up happening is you're going to have to pay that money back, and there's going to be penalties, and you're going to be charged interest on it. And for the people who were victims of these ERC mills, I think we're going to see an ability to get the penalties removed, but we're going to have to deal with paying back this credit and paying back the interest. And for companies that have since closed, then it's going to trickle over to the owners to a capacity. because there is a trust responsibility for owners of LLCs through corporations.
Mm-hmm.
Um, but it's going to be interesting, and it's all now starting to unfold. So I can't tell you, I'm in the middle of 5 different cases, like I said, right now, where we have gotten pushback. They've hired me, I'm stepping in, and we're starting to work our way through solving this situation.
I will be interested to hear your update on that, on how it all
I
plays out.
I would be happy to share that with you. Yeah,
We'll have to do
it's
a whole episode on that as they start to resolve. How long does,
yeah.
which is like, that's another good question. Is like, what does it cost to have someone like you work on a case just in a range sense? Is that typically like an hourly engagement, a retainer, like however much you save them in the negotiations or whatever is like they pay you a portion of that, or it's like just a flat fee per project, like, or it kind of just depends on the firm because there's kind of all different flavors.
Yeah,
Like,
it depends on the firm that you work with, and it depends on your situation.
sure.
Like there are people who reach out to us every week who are like, oh my gosh, I can't sleep at night. I've got this debt. I don't know what to do. I need help. And we start talking about it, and they owe $15,000 to the IRS on their 2023 tax return. For those people, I say you shouldn't hire anybody. We created a master class just so people can have a place to gain the knowledge of how
Sure.
to handle that from step one through the end,
Yeah.
how to ask for penalties to be released, things like that. But it's a fantastic tool for people who should not hire a tax debt professional. Um, I would say the thresholds for that are anybody who has income tax over about 25,000. Higher than that, you're starting to get into more savvy negotiating, and it really helps to have somebody who knows what they're doing representing you.
Okay.
Um, for businesses with payroll tax or sales tax, any debt over around $10,000, you're going to want somebody to step in because those are trust taxes, meaning you collect it from another person and hold it in trust to turn over to the government.
Mm-hmm.
When that doesn't happen, there's personal exposure.
Okay.
And that's where you want somebody really who knows how to navigate that stepping in. If it's below 10,000, you can usually handle it yourself. Um, but for every firm is different. For us, what we have found the best process to handle a client when they come to us, and the one that lets us have full integrity and transparency with the client about what we can do for them
Mm-hmm.
given their situation,
Yeah.
is we do a flat fee investigation in the beginning. And what that lets us do is file our power of attorney, call the IRS or call the state, pull all the data from the tax agency, get a hold of collection threats, right? Aggressive levies or garnishments, like, hey, we're working on a solution. We need you to step off for 30 days, 60 days, and let us breathe. Let us focus on creating a solution to this. And then going through the client's full financial condition so we know how the IRS or state will
Mm-hmm.
view their collectability.
Mm-hmm.
And then once we have all those pieces of the puzzle together, we can say to a client with firm conviction, we can settle this debt for you, or we're limited to an installment agreement, but here's how we can reduce the amount that you owe. Here's how we can leverage your resources to address the debt. And then at that point, we charge an hourly fee based on what level of representation it's going to take to get that done
Okay.
and how long a typical case, like an offer and compromise, the settlement, you're looking at a year, at least a year of
Hmm.
negotiations because you submit the packet and then you sit there and wait for up to 6 months for somebody at the IRS to be assigned, and then you start negotiating it. So we handle our retainer fee according to the engagement, how much time, and what we're doing at each month
Y-
through the resolution plan.
That's it. That was my follow-up question was going to be, how long does something like this normally take? And
Yeah.
yeah, over a year. Okay. Is
Yeah,
that for
for
like
an offering compromised, yeah,
like
that's a safe bet. Now, we've had clients who we've said, okay, we're going to negotiate an offer in compromise. But before the IRS will consider our proposal, we have to submit these missing returns and you have to start paying estimated tax payments at least quarterly according to the schedule because you're self-employed. I have one client who has not followed through with that first step for
mhm.
over 2 years. And she knows it. We've been very open and clear with her about, okay, but you have to file your tax
Oh my
returns.
gosh.
You have to make your estimated tax payments. And she says, yeah, yeah, yeah. And 2 years later, we still haven't been able to submit the proposal. But she says, you're worth every penny because I know if there's a problem, you're going to be there to handle it. But just keep after me. I'll get there one day. It's the clients. The clients help dictate how quickly we can get stuff done. We have clients who hire us, and within 30 days, we have an agreement in place.
Okay.
So,
So, okay.
yeah,
In my head, I'm like, someday they'll get to it, or someday the IRS will just get to them.
yeah,
How long does it,
eventually.
yeah, how long does it take normally for the IRS to just come knocking and say, look, you owe this tax. We're assessing the levies. We're leaning your home and we're taking your assets. You know, you
10
have just
years
failed
ago,
to do it.
yeah, 10 years ago, I would have said maybe within a year or two, right?
Really?
Before COVID, before things kind of fell apart at the IRS in the infrastructure. We're in unprecedented times with the IRS, and now we really don't know what's going to happen because we've got the White House saying we want to do away with the IRS. Don't think that that means that income tax is just going to go away and payroll taxes are just going to go away. They're just going to kind of rebrand as some other division because our whole infrastructure is based on having tax funds to fund our national defense, Social Security,
Yeah.
our infrastructure system, like our roads and highways. Taxes fund so much of what we have in our everyday lives. I see it shifting, I see it changing over the next year or two, but tax is not going to go away.
I don't think so either.
Mhm.
What I do think could happen is and it is, listen, at one point I was a government employee. I was in the military, and so I can say definitively that nothing truly moves fast. And unless you are within a certain subset of the government, you don't have up to date technology, and you have a lot of limitations because of the bureaucracy of it all.
Yeah.
Which I don't know, maybe could change. I don't foresee it changing, and the government ever being as nimble as a private company. But like, I kind of look at them like, man, if they started running some, algorithms and AI scanning and implemented, optical scanning on returns that were mailed in and just upload them, optical scan the data, scrub it, run an AI algo, they could find a lot of discrepancies really quick and become like probably really efficient. I mean, it's
Yeah.
when everyone's filling filing the same forms, there's the chances, like the ability to be highly, highly efficient in those audits, I think is there. And I don't know, yeah, it'll just take time to see if they actually go that route or if they just, I don't know, drag it along as, filling up trailers with tax
Oh,
returns and letting it start on
gosh.
fire,
That was
you know?
awful.
Yeah.
Yeah.
So yeah, it is. I think when you say it's like uncharted territory, I think that's I haven't been around for the entirety of the tenure that the IRS has been in existence, so I don't know for sure, but it seems like an accurate sentiment.
Yeah. And I think too, there are some people right now who have tax debts out there or who are banking on the fact that the IRS and the income tax is going to go away. So they're kind of being laissez-faire with their financials. Don't do that. I am
Yeah.
telling you right now, big, big, huge warning signs. Do not get flamboyant with your financial condition because you think income tax is going away. Don't do it.
Yeah.
Yeah.
If you find yourself in absolute deep crap with the IRS, what assets are off limits? Like, is there anything you can do to protect yourself from, like, as far as like creditor protection almost from the IRS? Like there's,
A little bit.
there's people that sell like programs that do that and this sort of thing, or, like the, irrevocable trust and the this and the that and the, like how legit is any of that stuff? Is there merit to it, or is the IRS pretty much coming and looking and go like, no, we pretty much know what you did there to try to protect it, and we're disregarding all those entities, and we're going to take the assets anyways?
I would tell people first start with a gut check, right? If you're having to take a situation and twist it on its side and kind of squint at it so you can shove it into the slot of what you think is going to really protect it, that's a big sign not to even entertain it. There have been a lot of scams out there. There was a point of, I had a client once who said, well, I am a natural born citizen of Alaska, and Alaska was not properly ratified into the United States. And for that reason, they cannot touch me for income tax. Well, let me tell you, they ended up in the target of the Department of Justice for tax evasion, and they lost. All these tax shelter schemes and scams, I don't put a lot of merit in them at all. I've had too many clients come to me with having a tax debt as a consequence of buying into these tax shelter plans and promotions. And there's a point where I want people to change their perception of what tax is and what it's intended for. And I think that helps shift the conversation, because when you think about what taxes are for and what they fund, right? Just driving down the street, think about it. There's money and there's a debt to what we have around us, our national security. Think about our military. What funds that? It's not just printed pieces of paper.
I'm going to take the other side of this trade.
Right?
I'm going to take the other side of this trade.
Okay.
It is printed paper. Well, not even printed. It's digital.
But it represents something, right?
But I think the reason that people have the hard time doing what you're asking them to do, and I'm not saying this is my opinion. To air my bias in the conversation, I will tell everyone my position is I wish the government was more efficient. I think people should pay taxes. I hate paying taxes as much as everyone else. Yep. I am not, in favor of big government and, more taxes. That being said, I think the reason people have a hard time stomaching the pill of like, hey, I pay my taxes and that's what builds our roads and bridges and pays for our, military defense and, blah, 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 blah. And
public schools.
Yeah. Public schools and Social Security for seniors and, the common good and whatever. Is because they just see the absolute fraud, waste, and abuse. Like it is so apparent.
Completely agree.
It is so apparent in the system. And so somebody goes,
completely agree.
Okay. So, when I was in the military one time, we had this exercise that was like, it was a training rotation, and they spent almost $90 million rail loading vehicles that didn't work. So they could be at the training exercise and sit in the motor pool of vehicles that just did not work. Right. So like they still spent $90 million hauling Humvees and Strikers across the Western United States. So they could just not work somewhere else. Right. And so people see those types of experiences and they say, well, $90 million is more than I would ever pay in taxes in my entire lifetime. And it's more taxes than everyone I know would pay in their entire lifetime. And they wasted that in the blink of an eye. Right. And so I'm slaving away here and they want it so they can just blow it. right?
Right. And you know
And
what?
look, I,
Completely agree.
yeah, no, it's a really hard pill to swallow for people, and I think
It
that's what,
is.
like, and not to get political, I don't want to get political, but I think the results of the election and the implementation of the Doge committee, uh, which is, I remember when Dogecoin first came out and we called it Doggy Coin. So sometimes I want to call it the Doggy
Yeah.
Committee or
I get
Commission
it.
or whatever. But like, I think that is implemented because people are so fed up with it, right? So,
Hmm.
oh yeah, it's a
I
tough pill,
completely
tough
agree.
pill to swallow. I wish people could do what you're asking them to do. I don't think reasonable people, though, like that pay attention around them, they're going to have a very hard time doing that and swallowing that pill. So that being said, I wish we could take the angle of do your patriotic duty, pay your stinking taxes, and move on with life. I don't think that's going to work. So I think we have to sort of take put the fear of God in them from the IRS. And so if you don't pay your taxes, what happens? Like, what really happens if you don't, you're like, you know what? I'm just not paying these taxes. I will, falsify my, records. I will start I'm going to say I started a bakery at my house. I'm going to write off all my groceries and, blah, 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 whatever. It's like, and I'm going to file some big fat loss on a Schedule C intentionally. Whatever, right? It's like, what are the consequences? Like so now the IRS comes back and says, yeah, we disallow that. And I'm like, well, so now somebody goes to you, Morgan, help us out. The IRS says we owe them all
Right.
this money and, we didn't think they were going to notice, but they did. And now we're in a tough spot.
Yeah. And the hard part is when there's something like that that is so fraudulent, they'll hit you with a massive, pardon me, massive accuracy related penalty and interest. And then what happens is they'll file tax liens, putting it on public record that you have this money that's owed
Mm-hmm.
and they have a rightful claim to X amount of money from you. That gets recorded in the county you live in and it ties to your physical assets. And if the collection notices that they send you don't inspire you to start addressing the debt, they will take collection action. They will issue levies to your bank accounts. They will garnish your W-2 wages if you have a W-2. If not, if you are a business owner, they will find out who has been paying you and they will issue levies to all of those funding sources, basically castrating you and your business to collect on the debt. If you have, if that still doesn't inspire you to start addressing the debt, they will seize assets. They will seize investments. They will seize real estate. They will seize vehicles. Um, but know that that level of aggression is like their last play.
Mm-hmm.
They don't want to get to the point where they're levying bank accounts or garnishing your wages. They want you to just be proactive in handling it. A lot of the aggressive stories that you've heard about the IRS coming after people and seizing assets and things like that, they don't just have a bill show up in their computer system and go, oh my gosh, this person owes us $50,000. What assets can we take? There's a whole series of notifications that goes to the taxpayer and anybody who has power of attorney recorded with the IRS for that taxpayer. And there's like 15 notices that get sent out before they start taking action. And the action starts with levying a bank account and then just goes up from there as you continue to ignore it. So by the time somebody's having assets seized, it's been like a year of the IRS saying, hey, really, we need you to pay
Yeah.
attention to this debt. Would you call us, please? We need to talk about this. We need to get a plan put in place.
Yeah. Yeah. Look, for anyone listening, I hate paying taxes as much as the next guy. I think we all do. No argument here on that. But there's a left and a, like, this is what my dad says. There's a left and a right ditch, right? And you are free to go down the highway and you're free to choose which lane you want to be in. be in the fast lane, be in the slow lane, go at a different pace than other people are going. It's your choice.
Mhm.
You'd probably be okay though. Get off the road into one of the ditches, and you're going to probably be in a real world of hurt, right? You got to stay on the
Yeah.
road. Anyways, gosh.
I've also heard a lot of business owners um, that I've spoken with over the last 2 decades. And a lot of successful people say, you know what, taxes are an inconvenience, but I just see it as a barometer of what I'm doing and how much money I'm making. The more money you make, you're like, eh. So if I have to pay 25 or 30% in taxes, well, I'm just going to work harder and out earn it. And yeah, as I earn more, I pay more, but that's okay because it's a sign that I'm successful.
Yeah, it is.
So a
Yep.
shift in perception can sometimes help you swallow the bitter pill of having to pay taxes. And if you really don't like what our governments are doing with our tax dollars, which most people have said, this is ridiculous. Why are we spending trillions of dollars for these ridiculous programs? Um, get involved at your local level.
Yeah.
Because as much as we're seeing come out at the federal level, the local level of governments are doing the same dang thing.
Local governments. What's interesting about local governments is they have to force the tax burden right away if they want to expand their government. So they can only expand their government as much as the tax base is growing. And that is one of the things that sets apart the federal government from state governments, and why so many state governments are, it's why so many state governments are more well-run than the federal government, candidly, right? Like, no offense to anyone that works in the federal government, but
Right.
that's generally an accepted opinion. And why municipalities hold credit risk when they're issuing bonds, like in municipal bonds, is because like local municipalities and states can file bankruptcy. The federal government theoretically could default on its debt, but if you're the guy that can print the money to pay the debt, you really wouldn't default, right? So the federal government, what's different is they can print as much as they need to, essentially, to expand in whatever ways they want. Whereas the state of Utah can't just print more dollars to say, well, we're going to, take on more debt right now and expand further with debt that we think we can just, print our way out of eventually. Right.
Right.
So there's some more, they can't run a deficit, right? Typically. Anyways, make some nuance differences.
Look at California.
Yeah, boy. That's actually
Talk
the exact
about a dumpster fire.
That's the exact, that's the example that came to my mind as I was talking right there. But I don't personally own any bonds that California's ever issued. So, and I don't live there. So sort of not my, I got more important things to think about.
Absolutely. But getting involved at your local level lets you have a stronger voice.
Yeah.
With the decisions being made with the money that you're putting into the kitty.
That is true. Yep. And, yeah, I like that your general advice there. And always, as we wrap up, is like, this is my takeaway from the conversation is, try to change your perception that, like, it's not fun to pay taxes, but if you're paying taxes, it means you're making money. And so use it as a barometer and, like, don't pay extra taxes, just pay extra taxes, but maybe be like, try to just be excited. Like, oh, I'm paying taxes. That means I'm doing well, and just get past that behavioral barrier. So that way you can not run afoul of the IRS and, keep operating and keep growing and keep doing all the fun things in life. And, if the ship starts to slide, right, and you're on the skids a little bit, like, don't wait to take action. Like, try to take that very serious. Get with your accountant right away, your financial planner. Get with someone like yourself at Golden Lion Tax Solutions, and start getting advice from professionals and saying, hey, I think this is starting to skid a little bit, and I want to try to right this. Well, it's a small corrective, I got to do a small correction here rather than a drastic, huge change that could be life-changing, right?
Yes, absolutely.
And if you do those two things, it sounds like you can do a lot to not find yourself in absolute deep, crap with the IRS.
Exactly. Exactly.
So, okay, well, cool. I hope somebody listens to this and gets a decent takeaway there. Maybe their takeaway is that Brandon just loves the IRS. It's wildly wrong, but if that's your perception, can't stop that. It would be fun to get back together, Morgan, when you file, finish out some of these ERC cases. I think that's such a fascinating issue out there. I didn't get any, I wasn't involved in ERC in any way, shape, or form personally. So, totally just observing from the sidelines on that. And it might be interesting too in the future to talk about, what are the tactics or opportunities to negotiate and figure out those settlements? Like, what are the nuances to think about if somebody's having to go through a settlement process with the IRS?
Yeah.
But
be happy to. I have 25 years of experience of doing just tax debt situations and dealing with them and seeing different programs and how they play out and client examples. I'd be happy to share that with you.
Yeah. Well, we're going to wrap it up today, and
Okay.
we'll have to find a time in the future to get back together and talk more in depth about those things. So,
Sounds great. Sounds great. It's been a pleasure. Thanks so much for having me. I really appreciated the opportunity to sit down and chat with you.
Yeah, it's always fun to learn something new from a totally different perspective. So, thank you. Thanks for sharing.
Agreed.